Yeah,
that's funny.
And we definitely realized our house is too small, so we actually, during the course of the year, we bought an old house with a nice big yard. So, but now we're renovating that still, so hopefully we'll be able to go to move in there in January. Of course, sure, with the kids at home for like 6 months, and it was tough.
Yeah. And are you in Joburg?
I'm in Pretoria, so kind of right next to.
Okay.
Yeah.
The Jacaranda city.
Yeah, exactly. Have you been to South Africa, I suppose, Dante?
Of course. Absolutely. Yeah. I used to, in a former life, I used to run Land Rover operations in 32 countries in Africa.
Oh,
and
wow.
last time I was in South Africa, I drove from Maputo, Mozambique, and crossed the border, stayed at Kruger Park, and then went into Joburg and then Pretoria and different places in between.
Oh, awesome.
Yeah.
Amazing. How do you guys know each other?
The cryptocurrency racket.
Got it.
Yeah, although Herco, you met my colleague Christian first, right?
Yeah, that's right. Yeah, so he presented at one of the stablecoin, global stablecoin working group sessions. I think he was actually there twice. Sorry, I see Arif is just looking for me. I'm just going to quickly take his call in case it's urgent. Please excuse me. Just
okay.
So Dante, how long have you been with the? So are you with the?
Sorry, guys. Arif says he can actually hear us in the background, so we actually apparently need to pause the conversation. So I'm sorry about that. I didn't know.
The core players in clearing and settlement that are highly regulated, fintech firms may have a light touch or no regulations applied to them. Based on this, our experience is that fintech firms may often not be in the direct regulatory purview of authorities and may therefore have less formalized and less frequent meetings with regulators. So the first challenge then is really this access to regulation. It is an important issue to resolve. Our laws and regulations have historically been crafted for well-established financial services intermediaries. The legal and compliance framework may be hard to interpret for fintech firms who may be tech-savvy startups, but with limited compliance, know-how, or competencies. Access to regulators and awareness of which authorities to connect with for particular types of queries is important. Our regulatory architecture can be complex with multiple financial services authorities ranging from prudential and conduct focus through credit-related to financial intelligence-related regulators. Access to this network is important in order to reduce any potential barriers to entry from a legal, regulatory and compliance perspective. This is why we have seen a rapid emergence of innovation centers, hubs, guidance units across the globe. In recognition of the importance of increasing access to regulators by fintech firms in particular. Let me go to rulemaking. Rulemaking in financial services can be complex. The rules of the game can be embedded in legislation and regulations and through related instruments such as directives, position papers, and standards. A good example of this complexity can be seen in the regulation of payment systems. Often, primary regulations set the conditions or criteria based on which stakeholders can have access to clearing and settlement systems. Such primary regulations position the overarching principles and objectives of providing legal certainty, deepening financial inclusion, and ensuring the general safety and efficiency of payment systems. However, at a lower level, rules related to how payment schemes operate are equally important in setting specific conditions or criteria related to a payment system. As an example, direct credit systems will define clearing timeframes and debit systems will define chargeback rules or conditions. These type of rules are often called the rule books in jurisdictions like Canada and the United Kingdom. These are rule books publicly available for schemes such as the Single European Payments Area, SEPA, credit in Europe, or in the UK, the faster payment system, faster payment schemes. In South Africa, we have found that due to legacy reasons, some of the rulemaking processes, especially in the payment space, have traditionally been the domain of incumbents. Based on some of the cases reviewed, our sense is that the broader input into the rulemaking processes by those impacted across the value chain would benefit from obtaining a variety of competing perspectives. The voice of fintech firms in this process is important. This kind of ever-increasing access to influence rulemaking is vital to ensuring that best policy and regulatory stances are adopted. Even more importantly, the rules of the game must not create barriers to growth for fintechs. We have identified a few scenarios where this be the case. Authorities have to ensure that the approach to and governance of such processes is transparent and robust. Access to resources. Two significant resource challenges facing fintechs are access to capital and access to skill set. Unlike incumbents, who generally have reasonable access to finance, fintech firms, especially fintech SMMEs, may experience significant additional challenges accessing finance. While consumer credit is likely well served in South Africa, SMMEs continue to struggle to access critical funding to sustain themselves and even grow. The inability of SMMEs to raise funds is caused by a number of demand and supply side factors, such as the lack of financial records and the inability of lenders to tailor their loan terms to match business needs. According to a 2019 report by one of the largest banks in South Africa, few fintech firms managed to secure startup capital, with the general sentiment indicating that funding seems to be readily but not openly available. Turning our attention to the importance of access to skills, although much emphasis is placed on the technologies in the fintech domain, it is the people, the skills, and the talent that create the innovation and propel the change. This is evidenced across the fintech value chain, from data scientists who unearth customer behavior patterns, needs and pay points, through the software developers and engineers who develop the solutions, to the business heads who craft growth strategies based on an emerging technology. However, similar to most countries, particularly developing countries, South Africa has a shortage of technical skills. The 2019 South African Information and Communication ICT Skill Survey found that the fourth industrial revolution has not had a significant impact on the South African ICT landscape yet. According to the report, these skills associated with the current set of emerging technologies, such as artificial intelligence, the Internet of Things, blockchain, automation, data science, and programming, were the scarcest. This leads to a race for talented and skilled individuals such as data scientists, programmers, software developers, and design thinkers. The challenge, of course, is not specifically to firms, but to regulators as well. However, based on our discussion with fintech firms, the race for acquiring such skill set is pronounced for fintechs, especially if they're still in their early phases of development and maturity. It is less so for big firms with well-established markets. Finally, let me turn to the importance of data, specifically refined and granular data. It has become a cliche to say that data is the new oil in the economy. As the digital economy continues to be embedded through the use of mobile devices, the use of social media platforms, and generally increasing activities over the internet and online commercial platforms, we will increasingly create and leave behind the digital bread and crumbs of unprecedented volumes. Never before have we seen such volumes of data, and for the first time in human history, we also now have evolving tools and techniques at our disposal through cloud computing, AI, machine learning methods, to handle such volumes of data. However, in this new digital technology, the availability of and access to data related to, for example, transactional payments or specific customer behavior has become a competitive driver. Access to both structured and especially unstructured data can provide significant competitive advantages to those who own it. Fintech firms in particular are exploring the use of big data to produce new services, such as product comparisons and tailored solutions on consumer-specific data. While big data presents new opportunities, the scope of available data and how to govern access to that data poses new challenges for the financial service industry and regulatory authorities around the world. As a result of the above, access to refined data is a key issue that regulatory authorities have to deal with. Examples of addressing it through open banking and open finance efforts are increasing in many jurisdictions. For South Africa, it is important to land on the policy imperatives for such efforts. There are a number of open questions for authorities. These include, but are not limited to, should incumbents be required to share their data with fintechs? Should the standards of sharing data be developed by the regulators or by the market? How is customer data protection being ensured, and what commercial arrangements might arise from owning that data? When dealing with such large data sets, what measures are in place to detect, respond, and recover from cyber attacks? Addressing these and other open questions is important in moving the fintech dial forward. In South Africa, numerous fintech firms applied for our regulatory sandbox processes to trial new open banking models. To make progress within this space, we require incumbents and firms to work together to shape our policy thinking and policy stances. Any unaddressed solutions will possibly continue to see fintech firms using methods that may pose increased operational risk. The solutions of open application program interfaces are therefore pressing. The industry should actively engage with fintech firms on this long-standing matter. We also need to learn from jurisdictions that have already traversed this path. Allow me to conclude. The South African regulators recognize the role they can play in addressing these access challenges. The IFWG aims to demystify the regulatory landscape, provide space for safe experimentation, and actively advance innovation. We do this through the Innovation Hub, launched earlier this year, and its 3 facilities: the Regulatory Guidance Unit, the Regulatory Sandbox, and the Innovation Accelerator. Since the launching of the Innovation Hub, we have received nearly 100 queries in the Regulatory Guidance Unit and over 50 applications to the Regulatory Sandbox. These numbers show just how vibrant and dynamic the South African fintech ecosystem is. More importantly, though, there are positive signs of increasing access to regulators and rulemaking for fintechs. which enable us to hear more of those divergent and new voices which are important to the system. In addition, the Innovation Accelerator is a space for us to drive both internally oriented and market-facing innovation initiatives. We focus particularly on those initiatives that address the challenges faced and have the potential to deliver benefits across the regulatory and broader financial services landscape. We currently have 8 initiatives under the accelerator, looking at important topics such as digital platforms, crypto assets, financial markets innovation, open banking, non-traditional data, and big tech in FinTech. What makes this unique is that regulators are journeying along to co-create and understand the major issues facing FinTech firms, including co-developing policy stances. The FinTech phenomenon is here to stay and will continue to grow. In the end, however, it's not about FinTech, but about creating vehicles to support innovation in the economy and the financial sector. It turns out that FinTech firms just happen to be the key agent through which we are moving towards a more dynamic financial sector. I trust you will enjoy the deliberations today and would like to end by congratulating the IFWG and the Monetary Authority of Singapore for arranging this event. I thank you very much. Thank you, Zippo.